Welcome. This is the December 10th episode of the Trading Pit, where we break down the Bitcoin and crypto markets with human and AI insights. I am your host, Marconi White, and in part one today, I'm joined by Benjamin the Whale Hunter and Amit the Range Sniper, who will answer why the market sold off and how Jay is positioning for the pullback. And in part two, Ben Lilly will be joining us for his third episode, breaking down the state of the networks. Benjamin, are you guys ready? You in the hot seat?
Let's go, sir.
Yep.
Okay. I always love to hear their excitement. I'm going to kick it off with you. The market corrected by, well, last I looked, about 6.6%. Was this a needed correction or signs that this bull market is in trouble?
It's much needed. It's still in the range. It's not doing anything not expected. So, yeah, very much expected after such a long run. I mean, not a long run, but 3-4 weeks run. So a little bit of correction was needed, but VIX are a bit surprising, but yeah, part of the market.
Well, the funding rates were absolutely insane. I think a lot of people, I mean, obviously when gig along, when Bitcoin went above 100K, so they got a little excited. Benjamin, I want to ask you the same thing. When we look at the funding rates, was this enough to cool off the market?
I think it's a sufficient cool off.
It's a sufficient cool off. We got our lemonade. Now we're ready to make for the next move higher.
Yeah, I think it's okay. I think we're good. Okay.
Well, there's some enthusiasm with the trademark enthusiasm that we've come to love from Benjamin. Amit, I want to ask you the same thing. You were expecting this. You said this was okay. Is the market now ready after this? The funding rates have been reset?
I certainly hope so. But at the moment, see, from the last dump that was really aggressive, you saw the pullback that happened, but that didn't happen this time. And it's teetering on the edges. So yeah, 93K, 95K is the level to watch. If that breaks, then Goblin Town. Otherwise, we are running up.
Okay. Goblin Town. Well, I'm ready for that. Well, tell me, when we looked at the chart for Ethereum, we were talking about this offline. ETH looks like it's retesting a multi-year resistance. Is it going to hold, Amit? Is it going to hold?
Yeah, ETH is going to have this sideways. ETH is not ready to run. I mean, I think it won't go past 4K till end of year. That's what my thesis right from the start is, because it has done that in the past. It goes sideways. So that's exactly what we are seeing. So
okay.
Knock about between 3,700 and 4K.
And for those who are questioning his Oracle capabilities, he did call for 100K before the end of the year. He got that right, so he's got to be right about everything he ever says on this show. You can take that to the bank. All right, Benjamin, are you on this pullback? What are you looking at? Blue chip, memes, or something else?
Primarily loading up still on Doge and also looking into more meme coins, dog shit. What else we can add?
You're doing a good job marketing it right now. I just want you to say. All right, so you're looking at Doge. You think the path is memes?
No, I think the path is okay. Here's the thing, right? Whether you're a trader or you're an investor, it really depends on what you categorize yourself. So we are like partially investors and mainly day traders, right? Myself and Amit, we have to trade for otherwise we are just addicts, and then we have withdrawal symptoms that reflects on our family.
I've noticed.
If we don't make a few $1,000s on Doge every day, then we feel like we are dead. We basically look at that as a way to understand whether directionally we are on the right path, and if there is enough volatility or steam left in the market. The day we start losing money on Doge, I think we basically think that a huge correction is on the cards.
Yeah.
So there are a lot of ways to estimate the market based on a few key tokens. So it's like if the market is so degenerate that XLM runs or ADA runs and funding goes up like crazy, then obviously you have to reduce your exposure a little bit. The same way if we saw that Solana pump fund volumes were going down, the number of tokens were launching were going down the last week. And then we basically see a huge correction on Solana. Solana could not keep up its price once it started seeing a slowdown in that side. So a lot of these things basically point out to what you could expect locally in the market. And all that is possible only if you keep paying attention to certain things. Some of things can be modeled to long term, some of things cannot be modeled long term. So that's how it is. So that's why I look into these low liquid coins often to get a sentimental feeling on how things are.
I may suggest that after this bull run, we set up a halfway house for Doge recovery addicts and for trading recovery addicts. I think it'd be a good business for us.
I mean, Doge, we talked about it, right? The day before the election results, I specifically know on Monday that Doge was running like crazy. And that day, on Tuesday podcast, we talked about it. There is something in the Doge that is front running the market. And since then, right, there is not even a single day where we didn't have a trade running on Doge. And it's like a standard setup without looking at the charts, go in, go out. Every second day it gives 2K. Every second day without fail. And on bad days, it becomes even more prettier. Yesterday's drop, it gave us good returns. So it's a bellwether for the time being. I mean, there is no science to prove it, but at the moment, we have the way Benjamin is saying, right? If Doge, we start to lose money on Doge, that means there is something wrong because we have measured the market or the sentiment with Doge since the election results, and it's so far been positive.
Okay, so pay attention to the legacy dog. And if that starts to look sour, then we may see a really steep correction. So for right now, as long as Doge is looking pretty good, this was a healthy pullback. People can continue to buy some of the, well, I mean, I guess we can get into that a little bit more, some of the trades that people can look at, but definitely the memes are going to continue to lead the show for now. I want to ask you guys, I looked at some of the numbers on the ETFs. Those continue to look very strong. BTC had 479 million inflows, but Ethereum is really starting to come up at 144. It's now over 1.5 billion in net flows. Bitcoin continues to be at 33 billion. It's an absolute juggernaut. The question is, when are you expecting a supply shock? You know, the question continues to happen. Are we expecting a supply shock to actually hit based on all this insane amount of activity and demand? Ahmed, I'll go to you, and then Benjamin, I want the same question. Or maybe Benjamin, you can kick this off.
So most of you who are listening to us probably know that we work with a lot of OTC desks and prime brokerages. So we keep trying to figure out information about positioning amongst hedge funds and other high net worth traders on how they approach things. And I keep hearing that a lot of the ETH positioning is still cash and carry, together with Ethena being a huge factor, because they have to short coin margin, or at least on USDT margin, because they have to give a lot of yields. And if you see USDE basically has gone up, and I think it is sitting at 5 billion in supply, right? That is the minted supply. So I think that is suppressing the market quite a bit on the ETH side. I'm pretty sure that a lot of traders have written off ETH. There is an underexposure. If you see ETFs, they're buying a lot of ETH. Probably a lot of it for cash and carry, but I think there is a definite positive sentiment on ETH. I mean, we have a president-elect who is basically a pro-ETH infrastructure guy, right? BTC and ETH infrastructure. So I think a lot of that matters. And ETH typically lags a Bitcoin rally. So...
Well, so I'm hearing both of you guys say and I know we'll get to the chart in a minute. We can talk a little bit about what the technicals look like, but it seems like we're setting this up that maybe, Amit, you said you don't expect Ethereum above 4K until the new year. Benjamin, do you have a similar kind of gut feel? It's kind of Q1 of 2025 is where maybe we're going to see this, the Ethereum beast unleashed.
I'm not sure, because I would have agreed to that perspective if we did not do the dump the past days on altcoins. But given the correction that we did on altcoins, like almost most of them dumped like 30 to 40%. Of course, they can do another 30% from here. But I don't know. We've cooled off on the funding rates. We've wiped off a majority of open interest. The liquidations that we saw was at par with liquidations that put in, even a swing bottom over the past 2 years. So a lot of those data looks pretty good so far. So I don't think we need to be overly worried. It's still higher lows when it comes to Bitcoin. and ETH is basically putting in its first solid weekly red candle. So maybe it is a little too early to start saying that we go in for a solid correction. And ETH is basically testing the breakout resistance zone, right? And it's like a triple top resistance on technicals, if you see. And it is a hard spot, but it is trying. I believe that if BTC holds up, if everything else basically holds up, stock markets and everything else, probably second half of December, we just, get the Santa Claus rally of sort, and ETH basically goes up to 4,600 maybe, because funding got quite neutralized. And I believe the OI weighted, open interest weighted funding rate on both BTC and ETH are below the neutral rates, like below 0.01%. So that's like below 8% annualized or 6% annualized. So that's very less. So for a bull market, so which is pretty good, because you don't see that wipe off that easily often. So
I did look at this morning at some of the open interest, and I know I asked that question before, but some of these other alternative assets, Doge had a 23% wipeout on OI or decline. XRP had about 20%. I think Pepe, the meme coin, had about a 30% wipeout on OI. So there was just an extreme amount of leverage that was in the system, really looking for this to just go gig along after Bitcoin broke above 100K. Clearly it didn't. So it's kind of bringing all that back as that's being sold off and hunting a lot of that.
To add leverage to that, actually, like lending rates on the institutional side went up quite a lot. The cost to borrow dollars or more stable coins or whatever, it is around 16.5% right now. It used to be around 8% during the summer. And the last time it hit 16% levels was January. So, and then we had a flush, and then, we went back up again. It was around 45K zone, 50K zone. And then we went, we had a flush, and then we went back up again until, March 70K zone, wherein it got another 16.5% round. Now, why does that matter is because, like this is taken out as a very free trade by most of institutional traders. And then they basically either use it to play a cash and carry trade, or, take it, swap it to Ethena, and, keep the USDE, and you get 25% APY over there. So you're paying 16.5, you're getting 25, and they get to net 9%. A lot of greed basically starts to play in. So I believe we had something like that happen right now. The basis is not in crazy levels yet. But interestingly, I wanted to answer your question on the supply shock. The rates to basically lend BTC to prime brokerages and OTC desks, they're willing to pay 5% APY right now. So if you're an entity, and if you want to basically get 5% on your Bitcoin, like you get 5% paid in Bitcoin as well. So if you want to do something like that, contact your prime brokerages, onboard with prime brokerages and work with them. But that also means that there is definitely a supply shock situation. That's outright what they said. There is a huge demand, and supplying to that demand is a big problem.
Interesting.
So there is demand in both sides.
Yeah.
So which is probably not a bad sign, to be honest.
Right. And just to kind of rewind, because you shared a lot of data in the last minute or two, where have you seen the supply shock? You mentioned the funding rates having visited these levels before. When was the last time you saw that? What happened? What was the play out in terms of a supply shock, or was there a supply shock? When have you seen the supply shock before? Because I think unfortunately, there's this idea that, things are supposed to happen in weeks. And a lot of times it can take multi-months. It can take, half a year, right? So what's as someone who's always in the markets, what is the time that it usually takes when you start to see these signs of the supply shock coming about?
So such rates, 5% APY, that type of demand could happen for two reasons, right? There is genuinely a demand for Bitcoin, and it's so hard to acquire it in short term. It can come as a result of ETFs or other OTC desks or more countries coming in. Could be a variety of reasons. The other reason is basically a lot of FOMO from traders who are basically trying to front run something that will come over a period of time, and that is causing a supply shock situation. So right now we do not know which is what. We do not know whether it is as a result of one of these two things, but what is the known data is that there is definitely a supply shock level of demand, and everybody is trying to find a way to cater to it because those rates are pretty good, and you get to lock it in for like 180 days, which is really solid. The type of borrowing that is going on to put more Bitcoin on the balance sheet, whether it is a trading firm or whether it is OTC desk, there is a demand. But also you have an equivalent demand in your stablecoin request or USD borrowing because your liquidity value has gone up, right? So let's say you had like 1,000 Bitcoin like in December last year, and Bitcoin has doubled in value by December this year. So you basically get to borrow much more of dollar on top of your Bitcoin, right? So instead of selling, you borrow it and you go and play along on hours or whatever it is that you want to do. So the borrowing is starting to happen. And the last time this happened was in Jan. And then we had a small crash, like not a huge crash. We dropped down another like 10-15% or something like that on Bitcoin. And then it ran up again to 72K. So the hope or the confidence still is that it's still all good. And, I think we're overly worried about a 10% correction that's happened on the majors. But yeah.
Well, and just seasonally, I looked at the chart. I think I saw somewhere that this happened pretty much the same last year. And yeah, on December 11th, so the same trading day a year ago, we had about a 5-6% correction. So almost seasonally, we seem to see this on this particular day, day not to be in the markets. But okay, last question that I actually want to break down some of the markets. I also want to give a shout out to some of the people I'm seeing here live in the show. Last week, we announced Jay coming online. Jay Online. Now, for those who are familiar with Jay, you may have heard about it from a centralized exchange perspective. That's been trading for years. Really great work. This is a brand new product we announced on the show last week. Went live. It's on chain, all on chain. Some really amazing technology happening behind the scenes. I think you guys, it's hard to overstate how significant this is. This is a really kind of a game changer type of technology. So it's really exciting stuff. But Benjamin, I want to ask you, and then Amit's kind of the same thing. What's been the feedback kind of week one? What are you hearing back from users, from people that are starting to use it? And then I want to get a little bit into some of the trades that maybe Jay's starting to look at, and maybe what that's going to tell us about where the market's going. But yeah, what's the feedback from kind of week one?
Sure. I mean, a lot of people, they're still finding it new. Of course, it's pretty new compared to what we used to do before. But the best feedback I've got is that it's a 3-click process. It's just 3 clicks. You're in 3 minutes, you've onboarded and you're gone. So that is something that a lot of people like than doing a lot of steps when it comes to onboarding into a platform. When it is centralized, where you have to fill in a lot of forms and do it. So I think that was the best of feedback I got. I think what we've been waiting for is more trading opportunities, because market was at a crazy peak levels at that point. And gladly, we've seen a huge correction across the board, and we are seeing a lot of new signals pop up on the back end. So I think we'll probably see a lot more positioning. I think on Solana side, JAI probably got up into like 6 tokens of sort. And most of them were older tokens, which has very good price action. But one of them is brand new. It's like a week old, but some very good whale positioning on it. So that triggered a buying opportunity, which has gone in, and it's got some supply. On base, we haven't seen much of an activity yet, but that is probably also associated with how ETH has been, correcting a little bit stronger than expected. But I do think if we go sideways on majors for the next couple of days and put in a solid base over here, we'll see a lot more load up on the altcoin positioning, on the meme coin positioning as well, because we already are seeing a lot of signals pop up locally. So
Mhm.
I think the bots are waiting for a bit more confirmations, and then I think it will start piling up more, which is
Bots.
good because
Yeah.
we've seen a crazy correction across the board everywhere. So when it piles up, and after this slowdown, when it runs up, it gets much easier.
Sure. Okay, and Amit, and I have a question here I'm going to ask here. Amit, what about you? What's your feedback or thoughts after week one?
I think I'm just trying to get my heads around it. As in the tech side of things, we understand. I mean, what we are in the process is basically there's a lot of positive feedback. I mean, I am giga bullish on that because reason being is this is one of tech that nobody has. So we are the first ones to the market with this one, and the way it's been positioning itself, it's like quite fascinating to see the way it goes through figures of different data points. It's not just because on-chain is not as simple as centralized exchanges. So it has a lot of social elements to it. It has loads of basically data points, different varied metrics that JI goes through and finds a trade. It's fascinating. And then it picks up a token and then say, wow, I mean, how did you find that out? Because there were few, I think there were a few trades today or yesterday, I'm not sure. But those trades I would never guess those trades. But I think one of the trades went up 50% this morning when JI went in and took that trade and the market started to run on that. And we were like, huh, it makes sense. I mean, it's going over the data. I mean, what we can't attach those kind of connect those dots, JI is able to connect those dots. And within hours, those tokens are running. So it's very fascinating to see. And of course, I mean, we to an extent, we see what it is doing. But yeah, it's making the connections that's very difficult for anybody to make those connections with their naked eye. So it's fascinating.
I dare say that's one of the reasons you want Jay to trade for you, because it sees things that you can't.
Exactly.
I know we got a couple of questions here. One, we got I want to say Yoshish IP. Thanks for joining us. It says, is there a minimum deposit? I know we talked about that last week, but can you guys kind of walk through the 3 strategies and the 3 minimum deposits or recommended deposits, I think is the right term.
I think the hard part is for the 8 mainnet, wherein gas fees is a problem. So we, across all 3 chains, we sponsor gas. So the application is actually sponsoring gas to a certain extent, like to basically enable transactions for a lot of smaller wallets. We sponsor gas. But the thing is, it's a bull market and it is basically emptying our gas wallets and still, going higher, especially ETH. So I believe last month we, reloaded the gas wallet like 3 times and it still wasn't enough. And it basically still had to pay up from the user's wallet. So on the ETH mainnet, the main chain layer 1, gas has been an issue. That is why we suggested that people typically have like 25 ETH or so at the minimum if they were to go in. And
sorry,
but if it is on,
just to clarify, is that 25 ETH for the Ethereum mainnet?
Yeah, if it is WBTC strategy, then it is 100,000 USDC. But if it is like for the micro cap, 25 ETH is pretty good. Is what I would go with. But when it comes to base and Sol, I think there's quite some flexibility because the gas that we sponsor, it pretty much works out to an extent. And very rarely the gas wallet basically gets emptied. So we're okay. We're okay with that.
So hopefully,
I think if anyone wants more information about anything on the documentation, if there's questions, obviously they can ping us, but there is a docs link also in the app, which basically takes you to a lot of FAQs, which you can get answer into. Yeah.
Okay.
Yeah. I think we are adding more and more questions because what we appreciate as well.
It's a huge product. It's in the sense it doesn't look like a huge product, but it's a brand new product. The thing is, nobody has cracked open the way we have cracked open on the usage of embedded wallets and account abstraction. So if you see most of the Telegram bots out there, or if you see most of the service provider solutions out there, they either go and deploy vaults for managing assets in a programmatic manner, or they go and deploy an MPC wallet, which is like a custodial wallet, and then you basically give the user private keys, which means you are basically storing the private keys of the user in a way, and you can get hacked. And which is one of the reasons why for years together we did not dive into a sniping bot situation. We did not dive into building in a Telegram bot for trading on chain, because we knew that if we go in that route, we have to store the private key of the user, which is not the route that I don't think our users want it. I don't think we want to do it. We are highly risk averse in that. So we had to basically wait for account abstraction and further ERC routes to come in, and for things to work. First of all, a lot of things were in development. For it to come to production was the hard part. And now that we have it, the avenues that we are looking at is humongous. We are already working on routes where, like if you are just keeping money in this application, even if you have not actively allocated it, you can earn yields. Like it is your self-custodial wallet and you can earn yields just for keeping funds in the wallet. So basically, why are you keeping your funds in your Exodus wallet or Coinbase wallet? They're not giving you yields. We will
put that money to work.
Put that money to work. So it's fine that you want to keep some like a hot wallet and store it and keep it aside. But why are you using any software wallets? Just put it over here and it's giving you yields. Well, and if you don't want to do passive, you can always allocate to these strategies. There's going to be some more that's coming up. We're trying to focus a little bit more on staking and also on the ETH side and DeFi side of things, because there is definitely certain good growth that's coming in that sector. But we're going step by step because there's quite the education that we are also trying to do for the users, for them to understand. Because there was one user who's been with us for nearly 7 years now. He messaged and asked, is this for Bybit or OKX? So I did understand that, we probably need to do a better job in explaining that this is on-chain. And once I explained it to him, and he was basically floored. So there is still, a little bit of education that we are trying to figure out. That's why we are getting as much feedback as possible and storing it.
There's an odd part of nature where the more things you simplify, the more you have to educate, right? Because you've taken all the complexity out, but now people still have questions, which is great. I mean, I think it's a testament to the product. I'm using it. I'm excited. I'm going to be sharing some of those, some of the results as they continue to come out. In fact, I saw the trade that Jay made today. It was very exciting. But with that, I know we got a lot of questions coming in on the chat, specific kinds of setups, kind of the stuff that we typically talk about during the week. I do have one last question. I'll make it brief, and then let's transition into that. How many trades should people expect? I think there's an expectation from a lot that, okay, I'm going to come in here every day. I'm going to see that Jay took, 3, 5, 10 trades. And that's, I'm expecting to see that kind of volume. You guys have looked at Jay for years now, and it kind of moves through different cycles where it's making fewer trades. Do you have any expectation you could share with people who are asking that question?
So on the on-chain side, specifically, right, this is not a high-frequency trading solution. This is not a sniping bot that you see on Telegram chains, wherein it is basically going and sniping hundreds of tokens that's launching on Solana. No, it does not do that. That is not the objective. Like if we were to basically design it that way, then we cannot promise against rug pulls. Over here, we are still not promising against rug pulls because we don't know any of these people and any of these tokens that's launching. It's purely data that everything is designed upon. But at least there's been some work that's gone into filtering out tokens, filtering out the list of tokens, and making sure that the initial deployers, and especially if tokens are graduating from pump fund, have they gone through the right route? How's the bubble maps? So there's been a curation that has gone in on the list of tokens, and the list that keeps getting added to the token database on the Solana side, because that is the harder part. On Base, it's much easier compared to Solana. On ETH, it's very easier to do things compared to everything else. On Solana, it's a much harder part. So do not expect that this is probably going to do like 100% every day or like 50% every day. So the goal is to basically have a system which is not asking you to spend 20 hours in the trenches trying to find the meme coins that you have to trade, but rather give you an exposure into whatever something that is new that is coming up, and also exposure to high volatile ecosystem, which you typically do not trade into, right?
Mm-hmm.
So it is not high frequency. You will see a few days where there is no trades, right? Because it is also dependent on the market. It depends on opportunities. There can be situations where there's like just 5 trades in an entire month. So be prepared for it. But what it looks for is a better RR for better returns to build up the portfolio to exit at better market caps and market multiples. That's what it looks for. And on a good correction, it tries to buy back and play around and reallocate. So that is the ideology behind the micro cap solution. On WBTC side, it's basically to the strategy focuses on building up, like buying the dips on BTC, building up during the bull market, hold it on to get the maximum returns while minimizing the drawdowns, during the corrections. So that's what that model looks for. So it's like, imagine if you're coming in new into the market, or let's say you come into some USDC right now and you are not sure what to do. Primarily, this is for those people, like this is where you have to park it into. And if you are like, okay, I don't want to do both, still wait for it. We're coming up with something really crazy. And I think we are definitely going to compete on a major level to a few top players in the market who basically have a lot of assets under their, applications. We are going to get there. And
so I just want to say to everyone who hears this, these guys are working tirelessly. I'm not sure they sleep at all. They probably have a subscription to Red Bull. Maybe they have stock in that. They're really excited about building this. This is an amazing product. I say that as someone who uses it. I get to talk to them behind the scenes. I feel very privileged to have that. So definitely now is a great time to be getting into Jay, to start getting familiar with the interface, getting a sense of how it works, reading through some of the documents. They're going to be changing and updating a lot. So a lot more on that. We're going to be talking about that a lot because we do see this as an amazing opportunity for all you out there that want to get exposure to Jay, don't necessarily want to go down the centralized exchange path. And maybe you have various assets you're looking at, be it, building up on Bitcoin using Solana or Ethereum. So based on your portfolio size and based on your, and so your preference, there's a lot of opportunities here. So definitely stay tuned, be tuning into the Trading Pit each week to learn more about that. But let's get over to some trades. I know that's what a lot of people are looking for. We got a lot of questions.
Let me tell you something.
Tell me something.
I don't know if it is too much of confidence of sort, but if I were to consider this as a product which we can put a valuation upon, I think this product's valuation by end of January is at least $2 billion. That is how I value that product. Because the underlying tech and the idea with which we are going in and the absorption of assets that's going to come into this application is going to be quite crazy. And I believe we are under marketing quite a lot on most of the things that we have done. As usual, we do not market stuff. But if this were a token project, like it's not. To everyone, it's not. But if it were a token project, that's the valuation you would be at.
Yeah. Well,
I just want to add to that point, right? I mean, I want to come with this. I'm really excited about this tech. That's why I wanted to come and talk about this. So I'm coming back to the point how much trades it will take. So specifically on the meme side and on the Solana ecosystem and the ETH ecosystem, it's very much narrative driven. So in my experience, what we have seen so far, it's very much picks on the narrative that has been created, which even before the narrative gets mainstream, where everybody's saying, yeah, this is going to go to the moon. It picks up right at the early starts of it and then starts allocating. So it depends. If you have narrative going, then you will see loads of trades coming in. When I say loads, it's, specifically our strategy, go conservative. So it won't be like hundreds of trades a day, but it's very much driven by the narrative. So wherever there is a narrative, there will be trades coming in.
Okay. Well, and to put that back to the point that Benjamin, you made earlier, Jay is able to pick up on a lot of these signals that are very difficult for us as humans to kind of piece together in the pace at which it can do it, the speed at which it's able to do it, to then start executing trades. That's the genius, and that's the value of being able to use something like Jay. And then now you add it on chain without the need to do and the risk from a centralized exchange, which does have other value. We can come back to that later on another episode. So again, exciting stuff. I know you guys want to get into the trades. We got a bunch of questions here, so let's get over to them. And we're going to get in directly into Bitcoin. Ooh, looks like my body's starting to move around a little bit. Trying to look at the screen. Gosh, I love being a microphone head. Okay. Any thoughts about Bitcoin and Ethereum volume? We got that from Ralph Humphrey. We got Max Meyer asking questions about ETF flows. We'll get back to that. Got a question here about MicroStrategy. I'm not sure we'll quite get into that. And then Max Meyer says, what's a good place to get into ETH support? So guys, let's now get into some of the good trading action we want to talk about outside of what we're seeing from Jay. Let's start with Bitcoin. Because that's kind of the central focus of the market as it runs. We can see what's going to happen to the rest of them. So from a Bitcoin perspective, are we looking at touching down 92, lower 90 range? Does it look like we're going to be able to make another run past 100K and really hit that convincingly? Where's the next stop for it? I'm not sure if Amit, you want to kick us off with what you're looking at from a Bitcoin perspective.
Yep, let's start. If you can see my chart.
Yep, it's up.
So the correction yesterday was a standard Monday play that we have all seen many times. So you create a Monday high, then you drop back, and then the Tuesday is basically generally a red day where it is trying to test the Monday low and run from there. I think we are at a point, if I have to take a trade here, right, this is my entry point. I will start getting in from this point onwards, from here to this point. So that's your Monday low. That's 4% range. Within the 4% range, you can easily play that. And the swipe below is your 5% range. I would go in. I would start laddering in from here to 5% range, because 95K, there's a lot of support in the order book across exchanges. So whatever you are laddering in, it will definitely get filled up to 95K. And then this is your protection. And if it fails below, you can clearly cut it. The reason I say this is, right, because you are taking this trade at the back of, let's say, not consider the VIX. So you have already had 5% dump, let's say body to body. So if we are picking up only on the last 5% of the dump, we are picking here. So basically that's the last leg of the trade. So this is a very high risk reward. If it turns around from here, from Monday low, this is what I think it's going to do from Monday low all the way back up. Like, but that's what I won't trade. The way I would trade is I'll go from here, go to the Monday low, and then take my first TP here, second TP here, and basically this is my 40% taken out, this is my 30% taken out, last of it will get taken out at cycle high, 104. And again, that's one side of it. But if it breaks down from here, this is where my last entry is. I'll cut the trade here.
So I want to ask, this is a very technical chart perspective, obviously. What's the take there that maybe what Jay is giving in terms of signals is starting to go back in to BTC, maybe take some trades? Does that give you any additional signal? Are you looking at anything from an order book or order flow perspective that gives you more confidence? Is it purely sort of those technical levels that you're looking at?
From the J perspective, right? It's very fascinating the way it's been behaving specifically towards the US close-up day. I've been watching yesterday, right? Just before the dump came in, Jay went ahead and basically reladdered the whole thing in 15% range on BTC. I was looking on my account saying, what's going on? Given what Benjamin shared a week before, saying there is activity that would happen around 10 p.m. UTC. So I was just curious what kind of activity would happen. And dot on time at 8 p.m. UTC, Jay started to reladder the entire thing. I was trying to figure out what's going on, and is it dump coming or it's going to run up? And then 15 minutes later, right, there's sure 7%, 8% dump comes in and it fills all the orders and then it runs up. And it was fantastic to see. So from Jay perspective, it's clearly seeing a pattern somewhere in the data that we can't see, or the time frame it is looking at. So from Jay perspective, I think it's constantly in BTC and ETH. It hasn't come out of BTC and ETH since election. So it was initially paying into Doge, but I don't think Doge is play anymore on the J side. Don't know why. But the ITC, BTC, and ETH is a constant play.
Okay. So Jay is constantly, it hasn't gone risk off entirely, right? It's constantly seeing opportunities to be risk on. It's doing some ladders down. You don't really see anything that would counter what you're seeing here from a trade perspective and sort of the ladder down and the take profit zones.
Yeah, I don't see any changes there. But I can assess to a point, right? Based on I can see some patterns on the charts. I can see some liquidity on the order books. I can see on the order flow perspective where the market is moving when it comes to certain levels. The trade frequency picks up. The sizing of the trades basically becomes higher. I mean, currently, if you look at it on the order book side, there's a lot of support. And on the Monday mid and the previous week, this is where we are sitting. So there's quite a lot of orders coming in that is of significant size. So that gives me confidence. Like if it's Monday mid is to hold, it's going to run up to Monday high at least, and then from there to cycle high.
Yeah.
But I would position my entire portfolio at this one trade. You know, I mean, the way we trade here. So we'll ladder down using exponential so that my most of the risk sits around 95K level. So if the market has to come down, I've 95K is where my most of the positions would be. It will be exponential 1.07 from here onwards, and this is where my risk would be sitting at this level. So if it breaks below Monday low, I can give it a bit of a breathing room. So if I have to lose anything, right? So what I would be losing here, 1%, last 1%, last 2%. So it will be if you go 50% of your portfolio in this range, you'll be losing 1% of it.
And this ladder down kind of technique, is Jay using this on both centralized and on chain?
No, I think it's centralized, not on chain.
Okay.
Not yet.
All right. Not yet. Yeah. Some additional capabilities to get through.
Yeah.
Okay. So that's from a BTC perspective. Let's transition over to Ethereum, which, you know, we talked at the top of the show, whether or not it could get past 4K. Is it doing a little bit of a cool off? I do want to ask I want to position this a little bit for both you guys, because we do have a couple of questions coming in here, more from a options perspective. And I think from Vinny and Ralph asking both if we can give more of a view from an options perspective. Guys, unfortunately, we're not usually looking at the options chain. These guys, that's not necessarily what they look at. I'm not sure if they have anything they want to share today. It's possible we may have a guest or two in the future that would be more of an options focused, but we don't necessarily have those today. But let's walk through where Ethereum, where it sits right now, maybe what some trades are looking like. You can also share what Jay is maybe doing from an Ethereum perspective. I know you mentioned being in it. And then if there is anything from an options perspective, happy to share that as well.
So I won't go on the option side of things because I don't trade options.
Right. Yeah, definitely not you. I wasn't sure if Benjamin had anything, but yeah, let's start just from a technical perspective.
From the technical perspective, I think if ETH doesn't go above 3,700, we are looking at 3,400. Simple as that.
Okay.
That's your Monday low. It's going to take down to Monday low and then run up. So if I have to ladder here, again, there is a trade to be had. So this is my range. Again, 6% range. I would not 6% on Ethereum, the way it has been behaving. I'll go in a 9% range, 50% of the portfolio. Because if Monday low, 3,400 is a critical level. It should not break that. If it breaks, I'll cut the trade straight away. But so, if it comes down to this level and runs from here, right? This is the trade, first TP, second TP. Okay.
Well, and you know, there's a little bit of concern, I think, from the market. When I looked at the numbers this morning, you saw Solana really have a pullback about 7% in 24 hours. Ethereum was only 4%. It was a lot more stable. It feels like it's really starting to get a little bit more structure. We also talked about the fact that the ETH ETFs are coming in, starting to absorb some of the supply. I know Benjamin mentioned the fact that this could be the carry trade, starting to get a little bit of wind. A couple other ways that maybe some hedge funds are using Ethereum that maybe they aren't using Solana or some of the rest of the ecosystem. How important is that 3,400 level to maintain market structure, and your confidence being that it's going to maintain that? I feel like I said, Ethereum is starting to get some legs here that it really hasn't had for a long time.
Yeah. I think 34. I mean, yeah, it's the critical level for Ethereum to maintain. If it goes below, then we are looking at 3K. Then basically, what it negates the whole move that it has done over the past month. But I don't think that would happen, given the the amount of ETF flows you are getting, and that shows there is an interest coming back into Ethereum.
Mhm.
So I hope it's more like on the order book side. It looks there is quite a lot of support sitting at 3,400. So yeah, I don't think 3,400 will breach, but definitely will be tested like yesterday.
Okay. All right. Benjamin, anything you want to add from an Ethereum perspective? Anything that's Jay seeing or anything else that you've seen that hasn't, that Ahmed didn't just mention? And it's okay if you say no.
I think we're okay for now.
Okay.
I think we're okay for now. I think we have to just wait a little bit for a few days.
All right.
And see where it stabilizes.
Fair enough. Fair enough. Ahmed, last question on that, just to revisit. You mentioned that Jay is kind of coming in and out of Ethereum. Is Jay making any kind of interesting trades that kind of caught your eye from an Ethereum perspective, like it did for Bitcoin?
I mean, yesterday was again the way it started to position itself. I think Ethereum is where Jay is making loads of money, or most of the money, since it started to run. Because the way it's structuring and laddering, right? Specifically, the laddering side of things. It's laddering is not same as BTC. Because during the day, what I've noticed is Jay is basically taking the exponential is not that high. So exponential is, even though the range is higher, even though I think it's last time it was running in 6% range, and exponential was around 1.03, it was running. Because I was calculating the orders it was coming in, putting it in Excel and see what it is doing and why it is doing. I was trying to understand that. But during the night, it changes the whole range from 6% to 10% to 13%, and then goes in a wide laddering, expecting there will be a dump incoming. So on Ethereum, it's basically specifically changing the laddering, changing the structuring, how it is getting into the trade and how it is taking the TPs. So it's, yeah, Jay is definitely seeing some sort of trends that I can't see at the moment, why it is behaving the way it is behaving. But yeah, it's laddering is fascinating the way it is doing the laddering during the day and during the night.
Okay. Which is very interesting. And for those who are asking, what he's talking about is referring to Jay doing that on the centralized exchange where it has a little bit more flexibility because of that setup. If that's something you guys are interested in and you can kind of go down that path, I know it had some complexity, a different risk profile, definitely reach out to them. It may be an option for you. All right, so we've looked at Bitcoin, we've looked at Ethereum. Let's talk about Solana and then let's get into some of these other trades. Definitely have to talk Doge. That seems to be the dog of the party.
Absolutely. I mean, I'm sharing Sol at the moment. So Solana, right? So 200 is, I mean, when we started the ripping above 200, when we had 210, 220. So at that point, we talked about Solana saying 200 is the level, or 200 is your new 120.
Mm-hmm.
So that's what it looks like. It won't go below 200. It's been tested multiple times on a high time frames, and it refuses to go below 200. So this is a good spot. Again, I would take a trade here. I mean, I'm happily again Monday mid to all the way to Monday low. So it's 13% range. I'll take a trade here. Because reason is there is a bit of an activity here that when BTC starts to break down, there is 1-to-3 ratio. As in, if BTC does 2%, Solana does 4 to 5% of drop, 5 to 5.5% of drop. So just to be on the safer side, I'll go down from 216 level all the way back to 185 level. But that would be it. I won't expect it to go below this Monday level, Monday low. This is where my bulk of my risk will set, just at Monday low, not beyond that. Again, same setup. This is the setup that has worked every single time for months now. So it makes a Monday low, comes on Tuesday. Tuesdays are generally red, goes down to Monday low, then goes up. So it has happened multiple times. So I would try to play that range.
All right. Well, that seems simple enough and a very high conviction, safe trade, if you will. We got a question here from the audience asking, how much of your position do you take out at take profit? How are you laddering out or taking profit out of these trades as it starts to move in the right direction?
So profit taking, it's again at the levels. So if my entire position or the 50% of the portfolio, generally it's 40, 30, 30, 40% BTC, 30% ETH, and 30% Solana. So if it is 30%, it all gets filled. Then I'll take 40% of profit here, and rest 30% here, and then I'll leave rest 30% to go up to the cycle high. But at that point, I'll go and break even here at Monday mid if it goes up to Monday high.
Okay. Well, hopefully that gives an answer to the question out there coming from D Learner. All right, so far we got BTC, we got ETH, we got Solana, and of course, if you're a frequent listener here, you'll know that there was a legendary trade that was suggested by Benjamin, which was to set at 3 levels. I believe it was 220, 200, and 180, where you could go super long on Solana and forget about it. Benjamin, did you take that trade? Did you go long Solana at 220 at 100x margin?
Both the orders got filled. I have one more order left.
Okay.
And if that also fills, I think I will be at 60x leverage.
60x leverage. Okay. And then when are you thinking that this is going to be concluded? By July of next year?
So either it concludes when I get liquidated, or it concludes when Solana is at 500.
Okay.
I can tell you now where it will be concluded.
Oh boy, Amit's definitely giving a little bit of hazing.
Yeah. Margin calls are coming very soon.
All right. Well, you gotta be prepared. But if you're a first time listener here, it was a legendary trade to really maximize your returns. Obviously, higher risk. I think he was suggesting 100x margin at each of those 3 areas. He said if they get filled and it rocks higher, you're gonna make all your money. So definitely an interesting trade. Do you see a trade? I guess you're still looking at that 180, or I guess the 200. Well, you said the 200 already got filled.
Yeah, 220 and 200 both got filled. Right now it is almost at break even because both the orders got filled, right? Mm-hmm. So that is good. But 200 I had in a range of 205 or 7 to 200, so that got filled mostly, and 220 obviously got filled.
Yeah.
And there is a big bunch sitting around 185 to 190. So yeah, the max leverage I can get on Solana is 75x. That is the exchange restriction on Bybit. So I'm doing like 60x.
You've been throttled like an internet server. Okay. Let's get in. I want to talk Doge. You guys were talking about the setups there, and I want to talk Aave because last week we talked about Aave really starting to show some strength. And when I looked at the numbers this morning, it had barely. I don't think it pulled back at all. So it may be an interesting trade to have. But what does Doge look like? The profit making dog.
Yeah. Can you see my screen?
Yep.
So that's the range that we have been constantly working on. So yeah, this is so from this point onwards, and this was 5th of November. From this point onwards, we started taking trades on Doge, and we took all the way up every single day. This is a trade that we took, and every other day it gave us the money. So from this point onwards, it was every 2 days. So still, if you see every 2 days, it drops and fills, runs up. Every 2 days, it runs and gives the money back. So this has been running so far. So yesterday drop here. So we had the ladder because the laddering is always in 25% range. So from where, if you start taking a trade from here as well, right? So that's your 25% range. So it filled half of it and then ran up. But most of it filled and it ran up. And that was a good profit to be had. And we came out basically. This was from this point onwards to this, it was around 15% gains. So from this point onwards, yeah, it was 12% gains we got on the trade. So that was good enough. Now it has gone in again. So I have laddered back in from 25% range from this point onwards, from here to this 25% range. But if Monday reaches, because that is the range, that's the bellwether for me at the moment. If Monday low breaches, I'm going to cut this. And I'll go bearish on the market. Then I won't be taking any risky trades because, consider this, right? The whole month of November, since 12th of November, it's been running in this range consistently. It has never backed down. It has never dropped below. Even though you saw massive dumps coming on BTC, nothing happened on Doge. there are no such wicks on Doge apart from yesterday. So that is showing there might be some weakness coming in somewhere. But if Monday low breaks, I'm out.
Yeah. Okay. Well, that seems pretty cut and dry. All right, let's move over then to Aave. As I mentioned, when I looked at it this morning, it looked like it was actually still up. It hadn't actually dumped at all. Maybe I got my numbers wrong. What is that? I think last week we talked about being able to do like kind of looking for a 25% correction on price, something significant to load up on Aave, but it being a pretty good setup maybe as we go into 2025.
Yeah, I mean, you said it right, 25%. So you had a 22% correction. So if anybody would have laddered down on Aave, they would have made good money yesterday.
Mm-hmm.
In 25% range.
So what are you looking at right now? Is this still a good entry point, or do you want to wait and get a little bit more confidence in the market?
I mean, this is sitting at Monday high. I won't trade there. Given the way it is moving, either I will start trading it if it goes above Monday high, above 284, or if it comes near 250. But this is an in-between chop zone. I won't trade it there. This is my range. Between 250 to 220, that's where I would trade. Or if it breaks up this range from this point onwards, I'm not trading this range.
Okay.
Because reason being is you got a previous month high sitting here, previous weekly low sitting here, previous quarter high sitting here. I'll trade down again from here to 25% range.
All right, fair enough. All right, well, we got time for one last one. I'm going to take it in from the screener. There's not a lot bullish right now because everything's looking pretty bad. But I do see a Troy USDT that came in a strong bullish. Let's have a look at that one, see if there's a trade there, or if it's already beyond something with a good risk reward setup.
Troy. Mr. Troy. No, that's Aave again. Sorry. Ooh. Hey. Nope. Not touching it.
Not touching it? Why not? Explain your reasoning.
I mean, if you look at the structure of this is highly driven by market makers. So this is a liquidity grab. So this whole structure until our time frame, this whole bit tells me this is highly manipulated token.
All right. Anything more you could add to that when you say it's highly manipulated? I mean, you see it launch. It looks like this just came out, right? The price history looks, well, there's barely any of it. It pumps and then it's consolidating in this very narrow band. You're saying that's usually a sign of market makers.
Yep. Because the range itself would be too high to play with. Yeah, there you go. 90.
Yeah.
Yeah, no, when you're not touching this.
Okay. All right. Fair enough. All right. Well, I think that's enough trades this week then. If we go through Bitcoin, Ethereum, Solana, Doge, and Aave, you've got plenty to keep you occupied if you need that shot for that trade. And definitely keeping an eye on Doge to make sure that it doesn't drop below that range low that you're looking at. That would signal further weakness in the market.
Yep.
And with that, I think we're going to wrap up this phase, this part of the show, getting into more of the trades. Ahmed, and next we're going to bring up Ben Lilly. He's going to talk us through the flow report. But Benjamin, Ahmed, thanks so much for dropping by, giving us some insights into how Jay is responding and looking at the market, as well as breaking down what Jay on Chain is looking like in its first week out there. If you guys are interested, we have a link, I think, in the show notes here on YouTube. We'll put it out on X as well. And then you can find us, you can DM us if you've got questions about that. But as Benjamin noted, there is information in the docs, which is a great place to start if you've got questions. But it's evolving quickly. There's going to be more capabilities they're looking to bring on. So it's very exciting times. But gentlemen, thank you so much for dropping by, dropping the alpha. Appreciate it. And with that, we're gonna bring up Ben Lilly, talk more about the flow report as we're seeing in the market kind of stabilizing at 97,000. Hopefully, it continues to go up from here. But Ben, how you doing today? How you
I'm
enjoying the
good.
price
How are
action?
you? Yes. Not the best day in terms of price action, but here we are, and we got to evaluate and move forward.
Yeah, well, it's good hearing Benjamin and Amit's perspective on the price action. I like Amit. He always has a place to trade, unless he just thinks the market is completely off kilter. So today there was plenty to talk about. And exciting to hear how sort of Jay's shaping up on its first week live, at least on chain. So, but now the bigger question, we think take a longer lens, is what is this looking like from a flow report? Or do we see the flows that are going to give us confidence that the price action and the stability of these networks is going to continue to shine on? So where do you want to start today? Do you want to start with Bitcoin, Ethereum, Solana?
Yeah, I think we got a little cadence here with Bitcoin, Ethereum, then Solana.
Okay.
From week to week. But yeah, I mean, it's the overall message, I think, this week is just the fact that we're seeing a cool down. We're witnessing it. Just on my chart right here, I put the spreads of the Coinbase premium. Let me kind of reduce the implied volatility index. Shout out to Cole Kenley over there from Volmex. But right here, we have the spread of Coinbase premium on Coinbase versus Binance on spot. When it's on blue, that's indicative of a Coinbase premium. The top one is Bitcoin, and the bottom one is Ethereum. And just yesterday, you can see as soon as that started to die down, the demand just wasn't there on the market. And basically, we got news that Saylor was no longer buying, and he had completed his most recent purchase. And you could probably just look at all these red areas, and that's pretty much when Saylor was taking a time out to probably get more capital. As of this morning, we're seeing it's trying to inch up there. We can see it like literally as we're talking right now, it's starting to inch up higher. And you can kind of see it right here. It's not as high as I would like to see it. I'd like to see that spread over 100, and that would be good demand. And so that's just market flow. But the reality and the fact of the matter is that Coinbase premium is driving the market. You can look at that right before the open, shortly after the open, and just before the New York close. And that kind of gives you a little tip of the cap of kind of what's coming, especially as it relates to the ETF flows. And so if you kind of see a good push on the premium, you're also going to see good flows on the ETF. For the past week, you kind of seen that push near the end, and you can be like, okay, we're going to have some good flows coming in this week. And that was for both Bitcoin and Ethereum. But, the flow of tokens on Bitcoin, a lot of it's just getting captured by ETF and Saylor. So any way to kind of see and get that a hint for what's coming has been helpful of late.
Ben, I want to ask you, you're looking at the flow, these sort of flow reports now on a regular cadence, which means you're going to be gathering information as you just did for ETFs. Do you have any perspective of what happens in January of next year? I mean, do you typically see a rotation from a traditional finance perspective as maybe portfolios start to rebalance? Is that on your radar? Is it still too early?
It's not too early. If we're going to get a clue and kind of a hint at what might be coming, it would be looking at the weekends, just because that's when that kind of institutional switch goes off. But I wouldn't necessarily say that everything's. I think it's easy right now to say that when the holidays are hitting later this month, that everybody's leaving their desk and things get turned off, and liquidity is going to be like it is during the weekend. But I wouldn't be quick to jump to conclusions there, because what history has taught us is that if we can create kind of outsized CME gaps, which is when the market closes on Friday regarding the CME, Chicago Mercantile Exchange Bitcoin futures market, and price can run over the weekend, come Monday morning, there's a decent gap. It really tells us that, there are participants still in this marketplace that are willing to push demand strings to make those outsized moves. So last cycle, when we were kind of in the early innings in the post-halving bull cycle in 2020, I don't think many people here would remember, but the end of December was pretty incredible in terms of price action. There was a lot of flow taking place on the Grayscale Trust, and that didn't shut down in the end of December. If anything, what we saw was Three Arrows Capital and Suzu was plowing into the Bitcoin market in that spree. And I think right at the end of December, the news hit that they put like $1 billion worth of Bitcoin into the Grayscale Trust, I believe. And there was an amazing gamma squeeze that took place just because the markets weren't as liquid. And so that demand hitting that marketplace created just outsized move to the upside. I mean, if we pull up the old, let's see if we can go back. Let me make this a little bit larger. We can kind of see that squeeze of how drastic it was.
Yeah, we're seeing the ETF flows. I'm not sure if you've got a different chart up.
Appreciate that. Yep. So here we are, end of 2020. And this was the candle right here that really kind of set things over the edge. It was just this violent move from 26,000 all the way up to 35. And so I wouldn't be quick to say that everything's going to shut down, everything's going to slow down. If anything, if there's somebody that's pushing demand in some capacity, whether it be Bitcoin or Ethereum, we're going to see it just, again, for these lower liquidity conditions.
Okay. Good to know. I imagine there's going to be a lot of people kind of thinking about what that looks like as we head into the beginning part of next year. And as you said, around Christmas time and holidays, it can feel like everything's walking away when perhaps it isn't. So
yeah, I just wouldn't be quick to judge. I would just kind of wait to see what's happening and just go day by day. It's kind of been the best way to do it. What's the premium? I mean, there's no reason the premium can't continue on, even if everything's pretty much closed down on Wall Street. Because Saylor, I mean, we've seen him active on the weekends. I remember seeing a bunch of wallets get spun up at Coinbase last cycle, and that would be indicative that Saylor's buying again, and that was happening on the weekends. But yeah, getting back to some of these flows, fees I've said there's been a lot of correlation amongst fees and ETF flows and just overall kind of positive price action, and it's been staying steady and healthy. And for the next week, I would actually, and I know this needs to be updated, but they're still pretty high. And what I would,
we're not seeing anything just yet.
Yeah, I got to get better at the screen share thing.
It's all right. It's all right.
Yeah, so the fees are good. I know this is outdated for a couple of days, but they are healthy. And over the next week, I would actually expect to see a bit of a spike. And the reason being is, if we recall, we were tracking some of the flows, and I'm going to change my screen share here because I'm getting better as we speak. This right here, I kind of unchecked a lot of supply that does not have to do with Babylon. And so Babylon, again, is this kind of liquid restaking protocol that exists, and there's a lot of different projects building on it. Lombard was the one that we discussed last time around. They're there to provide some active validation services. And I haven't looked into Solve BTC, the Solve protocol. Literally no clue what it does. But that's something I'm going to be looking at next week, because these flows I do anticipate to jump considerably. And that is because the cap, as it relates to Babylon, is getting lifted today. So if I were to refresh it, it might even have already happened, depending on what Bitcoin block we're on, because at this, you probably can't see it on here, but at 874088, write that down, make note of it, right? Just kidding, of course. But once that block is hit, these caps are going to lift for Babylon. It's going to happen for 1,000 blocks. So 10,000 minutes, whatever that comes down to. And they're also increasing the amount of Bitcoin that can get staked here. So they're sort of just seeing like how much demand is out there. We're just going to, and to me, this is like, we're just going to open up the gates and let anybody that wants to come in. So this is, I have to imagine, it's probably their last season here. That's going to be seeing a lot of Bitcoin flow. So that's kind of what a fee driver right there. Just watching those transactions move from various wallets on Bitcoin and moving into these other networks. And so that's something to look forward to next week. And I look forward to talking about it next week and hopefully see some significant flows on the chain for once for Bitcoin.
Yeah. No, that'd be fantastic to see some of that activity.
Yeah, man, we could be hitting, oh boy, 50, 60,000 Bitcoin by the time we talk next week, which would be massive sums. And that would just, again, when we talk about liquidity conditions, this is essentially mercenary capital that's willing to move. So behaviorally speaking, these are going to be one of those individuals that are more likely to sell. And they're kind of chasing these points and these future token allocations that exist. And historically speaking, Ethereum was a great example of this with Eigenlayer and all the other protocols being built like Renzo and Kelp, Karak, and so many others that it was absorbing a lot of ETH, and that was creating a lot of price action to the upside for ETH back then. So this could become a demand driver that I don't think the market is expecting, since all the headlines are talking about MicroStrategy, Sailor, and ETF flows.
You were here, at least in the background, when we were talking a little bit about the supply shock. Benjamin was sharing some of the conversations he was having with various institutions that are seeing some of that. They're seeing some of the interest rates going out. Did you have a perspective looking at, as you do, on the supply, the flows, the supply and the demand side? Anything to add from a supply shock perspective that wasn't discussed already?
Not at the moment. I mean, there was some really significant funding rates that were taking place. And when that funding rate hits those levels, people take positions to go ahead and take you could think of it as a delta neutral position to just essentially farm that carry trade. And that was taking place substantially, because you're just seeing a lot of people talking about these higher yields and a lot of products that do exist. They're sort of reflexive of those funding rates. And so as supply got moved to go ahead and try to take advantage of that, they were making decent yields, but that doesn't really exist right now. So it's a little bit of an unwind. It's not a full unwind, but some of that supply is becoming available, I would have to imagine, the past 24 hours into the marketplace, just because the yields have kind of diminished since then.
Okay. So nothing to suggest a massive supply shock is coming in. As you said, a little bit of an unwind. So nothing on your radar thus far that's really signaling that.
No, not necessarily.
Okay.
I would like to see, I know this isn't really talking about the flow report here, but, implied volatility levels, I would like to see those start jumping higher, and then starting to be on longer dated options contracts, because that would just mean market makers are starting to chase a little bit, and they're sort of caught up out of place and offsides. Then if you see those funding rates start to be elevated and sort of remain that way, and then you start to hear those supply shock concerns, that is going to be the more exciting part of the market, when people essentially get blown out as they've been running certain type of trades and algorithms for the past 2 to 3 years that sort of need that reset. And, once you see the yields across the board getting that attractive, people are trying to capture it, and you need capital, you need Bitcoin to put those types of trades on. And so that would be essentially, a reflexivity loop to just accelerate that supply shock. But yeah, so to kind of sum up Bitcoin this week, fees are looking good. We obviously see the ETF flows have been significant, but the Coinbase premium has dwindled a little bit. Starting yesterday, it was negative, and we see it starting to creep up. But if it doesn't creep up, then I wouldn't expect ETF flows to be as outsized as they have been for the last week. If anything, if I could try to make a prediction for this week, I would say they're still going to be healthy, but not going to be as strong as we saw last week as it comes to those ETF numbers from day to day. But one thing I'm excited to watch, because we've been talking about Bitcoin's, potential DeFi narrative starting to come into place here as ordinals and runes and the like start to try to gain mind share in the market, is what's going to happen with Babylon open these gates up today. Are we going to see significant flows move over there? And how are fees going to respond as well, right? Is DeFi going to really start to turn up the fee game here on the network, or is it just going to be sort of a hope and a prayer, and we don't really see those numbers hit? I think this week will be interesting to watch for that. So next week we'll reflect back on that, and hopefully we can talk about Solve a little bit as well. So
that sounds good. That's
it for Bitcoin. And let's get into Ethereum here.
Let's get into the big dog. I find Ethereum so fascinating because it's been so hated this cycle, at least from a crypto Twitter perspective. So it's nice to be able to take a step back, be able to analyze it. What are the flows actually saying about the state of the network, rather than having to get into just a lot of the soap opera.
Yeah, there's a lot of it. Max Resnick, for example, just decided he was going to start to work with Solana, but that writing was on the wall a little bit because he was really leaning towards wanting more centralization when it came to Ethereum. Increased bandwidth, reduced latency, bandwagon, and so Solana, that's its unique selling point. And so if that's really what you're all about, then your interests lie with what Solana's talking about. So it's probably a really good fit for him. And I hope he has a lot of success over there. And Ethereum definitely has its own issues. It's got the Pectra upgrade coming up in Q1 for next year. And that's been a lot of the discussion, and that's sort of fueled a lot of this kind of, I don't want to call it hate, but just, it feels like there's disagreement taking place in the Ethereum community, and it all has to do with fees right now. And are we going to go ahead?
Yeah, sorry. Can you just summarize really briefly maybe the two core positions on the fees for those who are unfamiliar with what is being, I guess, why it's so contentious?
Yeah, so a lot of the EIPs, Ethereum improvement proposals, are still coming down. In terms of the discussion boards on which one to actually include into Pectra, they're getting really close to finalizing a lot of those lists. They just had a developer meeting, I think, last week, and then on Thanksgiving in the US timeframe was another one. And one of the things that they did start to finalize, which is the blob market. And currently, for every block you can put into, and these are L2s, for example, there's plopping data into the L1. And, when they do that, you can kind of consider it as a blob. And so right now there's a max of 6 that can take place, and there's a target of 3. And so what the target means is that when the market is kind of averaging right around 3, that means the fees have sort of stabilized. We found this equilibrium in the marketplace. And so things aren't rising too much, and they're not dropping down to essentially 0, because one way is pretty much 0, which is the fees. But they're going to change that. And so that's been the contentious issue among the gas limit. But as far as the blobs is concerned, they're moving it to 6 as a target and 9 for the cap. And what this means is you really need to have 6 per block to kind of maintain status quo of whatever the fees are for the previous blocks. And I am not supportive of that from an analyst side, only because we don't see, and I'm pulling it up right now on my screen here, we don't see the fees being significant right now. We can see there's, some volatility from day to day, and a lot of this has been driven by Base and kind of what's been going on with the AI agents over there. And as kind of these projects launch over there. We're seeing a lot of transactions for individuals trying to snipe these projects. A lot of failed transactions have been happening over there as well. I believe just kind of reversions. And that's sort of been causing a bit of congestion. And so there's been a lot of blobs coming from base. And we're also seeing Arbitrum start to spike up a little bit as well. But we don't necessarily see like an overwhelming demand taking place right now. And so for me personally, I would like to see more L2 demand show up before the fees start to get adjusted. And so that's now is it going to be an issue? You know, I think L2s are going to have some demand here as price starts to go up. Full disclosure, I'm sort of expecting this all-time high to be Ethereum to get pretty close to its all-time high right around the turn of the calendar into 2025. So if that's the case, you know, number go up, technology is real. And so fees are going to start to climb along with it. And if that is essentially, if that price action is hot enough, then I would expect L2s to start to drive some of this blob fee market. So when they go ahead and make this adjustment with this upcoming upgrade, I think it's going to actually be pretty good timing. But I don't think long term it's going to be sustainable. And that's sort of on, you know, looking at a bear market scenario. And I've discussed this before, you know, talking about Ethereum's Great Depression, when this fee market got changed in the Denkun upgrade back in March. You know, they made this blob market, the demand hasn't been there, and then we see how it's been driving fees, which is essentially non-existent on the L1. And that's been, in my opinion, it was essentially shooting oneself in the foot. And you can almost see the day that got implemented, how that looks relative to Bitcoin. And I think it's pretty telling if Ethereum cannot really be status quo to Bitcoin in such a market environment, at least back in earlier 2023. So that was, 2024. So to me, that was just a telltale sign. Like you can't ignore it. So we'll see. That's coming up, but fees are a driver here, and the upgrade coming, that's going to be a change in that market. So you got one side saying, yeah, okay on the blob market, and the other side saying, you know what, let's maybe reassess it. Let's not over tweak it. But then the second issue that's a bit contentious is the gas limit. So right now, I don't want to say anything necessarily too wrong here, but I think the limit is 60 million. Let me pull that up while we're talking right here, and a target of 30 million. And, you know, for those that aren't aware, you know, gas is the amount that you're really asking for the EVM to compute. And so as the whole market wants to demand more of the market, okay, so here is, 30 million. And I believe the target right now is 15 million. And so they want to double it. And you can see the last time that this took place was August 2021. This was a topic I wrote about as well in that espresso piece where, you know, Ethereum went ahead and they did this. And then you go ahead and you look at the price chart relative to Bitcoin. And it's kind of a similar story. Initially, it alleviated some of the stress that was taking place on the chain, but then all of a sudden they had this overabundance of block space and compute that the market could buy and purchase, and eventually the demand waned, and I think that caused, you know, significant deflationary pressures on Ethereum, which translates to lower price per unit. So those are the two sides. Do you raise the gas limit to get essentially, you know, more computation taking place, which, you know, increases the hardware requirements? Or do you kind of keep things as is? Like, is it really that big of a problem? We don't see fees going crazy yet. So,
well, and it you know, from an outsider's lens, you got the analyst view that you just shared. You have the speculator versus the long-term builder view, which I could see kind of different takes on what that is, someone would say, well, listen, I want the number to go up, especially in a bull market. I'm expecting the price of my unit of Ethereum to go up. The builder saying, well, we want to, we're concerned with that, but perhaps we're looking more at having the rails to be able to onboard as much traffic as possible and kind of building towards that. That's kind of my take on perhaps why a builder may be saying, let's make these proposals now to move the needle on gas limits and to change sort of capacity. The one thing that comes to mind immediately, which is very fresh of mind, is what's happened in China, where they overbuilt capacity for housing, and now they have what sounds like millions of units, which are just sitting there vacant that no one's ever come into. I think there's a famous town that was built like this, that with beautiful multi-million-dollar homes that there's like 6 people living in them or something like that.
We've had this debate before in cryptocurrency markets because Bitcoin back in 2017, it was a big debate on big blocks or kind of maintain block size, and Bitcoin Cash it didn't have a big following, so I don't think we could really call that the best example and case study for saying that big blocks failed. But at a certain point, they had to put weather data into those blocks just to fill it up, and that is a lesson that we should really take to heart, is what I would say, because when it comes to Web 2 and a lot of these studies, when it comes to kind of computer science and looking at bandwidth and latency, it all makes sense, those arguments. If that's your lens, like, I get it. Like, let's just see how fast things could go. But if you don't have people also trying to see how fast things could go, you have a commodity there that you don't have in a Web 2 environment. And this commodity requires a little bit of, monetary policy consideration.
Right.
And if you neglect that, you're going to do what a lot of other projects have done historically. And this was almost a big joke in 2018, was that this massive upgrade was taking place. Oh, it's the greatest catalyst. It's going to be the fastest chain in the market. And price, 6 months later was destroyed. And it never recovered. And part of that just had to do with, you have a certain subset of demand, and you don't have to make these drastic changes in terms of the amount of throughput you allow or the amount of computation that you're going to allow in a block. And it can be more of a smooth and model uptick. And that's one thing that we're, for full disclosure here, we are working on creating a model that tries to better predict what that gas limit should be. It's this whole work around kind of our CPI index for Ethereum. But if that gas limit can essentially have this a bit better monetary policy consideration attached to it, then maybe it can be a little bit more responsive to what's taking place in the market. And so that, in my opinion, is really a lot of, when we think about scaling these chains, I feel like that gets put into a corner and just kind of gets ignored. And when many start to realize, like, wait, what did happen? Why did the price fall so much? I think a lot of the short-term thinking is that we need more marketing, we need more users, we need better applications. But at the same time, if you took, essentially create better price stability on your base asset, you allow that number go up, technology to work in your favor. Because if this number go down, technology, well, then you start asking those other questions, and you might forget, you have this commodity that you need to take care of.
It's it underscores the challenge in this space that you're working with a variety of disciplines. It's not just computer science. It's not just cryptology. It's not just economics, game theory. You can go down the list, and distributed networking. It's all of those combined to create that success. And to the point you're making, I mean, it's not just about latency and speed. There's an economic factor as well. So, okay, well, I think that's a I think I asked about a short version, but I think that was a deep dive kind of version into sort of the competing theories or competing thoughts about why this proposal should go forward. What else from a flow perspective are you looking at right now for Ethereum? Kind of bring it back to that. What exactly are we seeing?
Absolutely. I'm surprised, Marconi, you haven't learned about, trying to keep me off tangents here.
Well, I do what I can. There's only so much I can do. So much I can do.
Yeah, so let's get to it. Demand on Ethereum is pretty decent. There's a little bit of an anomaly happening in the market that I noticed, which is like 10 UTC every day. There's like this nice surge, sort of like European hours, I believe. What's that? 10 UTC. So that's 5 a.m. Eastern. So it's like morning markets in Europe. Something just sort of kickstarts and gets going, and that must be like pre New York Open type of stuff. But that's an interesting dynamic. It looks like it's starting to wane a little bit, but we are getting some nice peaks over the last couple of days. So the demand's there. I would like to see it a little bit higher, but of course that has to do with the blob markets that we mentioned. This looks so much better than it did before. Like if we were to zoom out, I think I'm not going to look at this on a 2-year time frame, but you know what? You can see actually Hilo Dobby has, of course, Heel Dobby. I don't know why I always put an O in there, but I do. But you can see it's starting to get, more sustainable, is more healthy, right? I think this is going to continue on up until that upgrade that we mentioned. So things are looking positive over there. Even if we look at the flow of tokens of late, Artemis does a great job of this. Here's the month-to-date flows. And everyone likes to point to like, oh my God, Ethereum, there's so much flow leaving, like it must be dying. But in reality, it's mostly just going to its L2s. You can see that base is absorbing a ton of this. Again, this has to do with the AI agent narrative. Virtuals is happening over there, and a lot of building has taken place with Coinbase for the past year. We've been watching them, and there's just so much stuff coming, and they're creating a giant ecosystem. And I wish they were more supportive of builders, like they tend to claim that they are, but in our opinion, they're not. We've reached out to several. So, if you're listening here, check your messages. We're in there. Solana, we'll get into that one, but decent flow is taking place. But Starknet was the other one that caught my eye. Starknet has been up there for a bit. And if anybody recalls, they had like the worst airdrop known to mankind. And the entire community was trying to bully them into more tokens. And they basically just said, like, you're only here to farm. And it's kind of like, well, yeah, you're only here to drop tokens for us. So it was like two parties. They all are assuming the same thing, but they expected the other one to not know it. But it looks like it's starting to have some inflows for the past month. So it's something to take note of. I'm probably going to take a look over at Starknet over the next week and see if there's any projects that are kind of responsible for these. But it's good to see. Arbitrum had a good peak for if you were to look at this at like a month basis, but it looks like some of the hype over there is starting to dwindle. Same thing with OP chain. So,
I've got a question here, sort of longer term scale. It feels like a lot of these things, they come out of the gate, they really get a lot of attraction, and then they sort of just die off base. Maybe, despite maybe some of its flaws in terms of how it's supporting developers, actually seems to be growing at a sustainable clip. Is that would you agree or disagree with that claim?
I would agree. You're seeing more liquidity show up on Aerodrome and Uniswap over there. With the work that we do with JAI on chain, a lot of the work that has to be done is just finding pairs that have enough liquidity to be traded over there. And so we're constantly monitoring those things, and they're really ticking up. And so Arbitrum used to be like the only place that had decent liquidity in an L2 environment to allow a lot of these systems to kind of work in an autonomous manner. If you're doing it manually, you can really go to any chain and try to get fills and reduce slippage and all that. But Base has got liquidity. In fact, there's a strategy where JAI will do it for Bitcoin over there because they actually have enough CB Bitcoin and I forget the other wrap Bitcoin that exists over there. But it's decent, right? It's sustainable at the moment. And so we were actually surprised how good it looked over there. So good things happening with Base. There's definitely good reflexivity taking place. And if they don't drop that token, I think this will continue on. I mean, Arbitrum, I remember being vehemently against them dropping that token, but they wanted to cash in, and we just haven't seen the same thing ever since. And
Yeah.
So Base has been adamant that they're not going to drop a token, and I think that is for the benefit of everybody building over on that chain for now, at least. So
okay. Well, I'm very curious to see. You know, I think about and not to be on a tangent here, but I feel like we've entered a new era of crypto. You know, and when I mean by that, I think it was is it Dan Moorhead, I think of Pantera Capital, said something like he was asked for years up until now. He always said, you know, prepare, Bitcoin could go to zero, and he said he stopped saying that. He said that it's not going to zero anymore. And I feel like that's what I would say for the broader environment as well. Like this is changing. I don't know exactly what that means and all of its implications, but I feel like ecosystems like perhaps a Base maybe be an interesting case study that it's going to see continued growth over an extended period of time. And we're going to continue to see these flash in the pans where someone maybe has an interesting idea and it gets a lot of attraction. They've got some interesting incentive programs to try and get that, but it's going to be farmed out very quickly. And I in some ways, I guess from a flow perspective, and asking you that question, is Base kind of the archetype of what you're expecting to see going forward? Do you want to see more of these experiments continue to try all these different ways of attracting capital? What do you think would be healthy for any of these ecosystems to continue to grow?
I would like to see another narrative pop up on Base. A AI agent has been an incredible one to watch, and I think it's going to continue. I think a lot of the solutions are just surface level of what could be built really in the marketplace at large. But what they are doing is essentially doing these AI agent offering models, which, you know, ICO models were popular with the ERC20s, and now we have what's taking place over there, which, you know, that's responsible for a lot of these ETH flows. People are taking ETH and they're buying ETH and they're moving it over there to go ahead and make these investments and these decisions, and it is further out on the risk curve. But that happens in these marketplaces, and you want to see that currency kind of act as that asset for those transactions. I mean, Solana is case in point. You had that entire meme coin frenzy unfold over on Pump Fund. People needed Sol tokens, right? And they hold it, and when they're trading out in and out of those tokens, they're moving to and from Sol. Like, it is the reserve asset over there. It is no question. Right? Nothing else is going to supplant Solana on the Solana ecosystem. And the fact that you see ETH acting as that reserve assets on these L2s, like, that is very strong. And that is actually aligned with a lot of the things that they want to accomplish over in Ethereum. And so if Base was able to really like kind of have like the second life to AI agents, or some other narrative starts to come up on the social side of things, because I know they're pretty close with Farcaster, and a lot of work has been going on with Coinbase Wallet and creating kind of, you know, the ability to operate amongst the two. If that could hit, you know, that could have second life to a lot of these things. So something to watch out for over there.
Okay.
So yeah. One other thing I wanted to point out today, which, you know, we talked about fees. Those look like they're healthy. I would expect those to continue to remain healthy. ETF flows, I didn't mention it, but I would assume our listeners know those are very strong over the last week. But where is ETH going on chain was the other thing I wanted to bring up. And for those that might just be tuning it out or kind of forgetting, you know, yields start to rise when ETH starts to rise hot in price. And one of the protocols that take advantage of that sort of activity is Athena. And we've seen a lot of flows over the last few weeks related to Athena. I mean, there's some days with 9-digit flows happening. And for those that aren't familiar, but again, I would assume our listeners kind of know this, they go ahead and they harvest that funding rate. So they take ETH and they go ahead, open up a 1x short on a centralized exchange and harvest that yield that gets kind of created in the synthetic token, or I like to call it kind of a yield product. I know I'm getting ready for kind of crouching down because I feel like somebody's going to throw water bottles and stuff at me from the stands, but that's the fact of the matter. It's a product. So
and so what is maybe this is getting far beyond what you wanted to talk about today, but it's an interesting flow perspective. Do you see this as a risk to the ecosystem? Because I think that's where a lot of people, maybe alarm bells are going off, and it doesn't have to be at all related to what they've seen in previous cycles, but they see sort of this yield going in. Does it add a risk? Is it adding any kind of systematic risk from your perspective?
If it's going to, I don't really see the crack showing. The only, one joke that we kind of make when we do a lot of on-chain metric building is that the more centralized a product is or project, it's like the greater availability of their data and accessibility of their data they tend to have. Like Athena goes to some lengths to try to make as much as they can as visible as possible. And it's like this central hub of information.
Mm-hmm.
But you go to a project that, is all waxing poetic on being decentralized and, has a DAO and all of the data's on chain. Good luck trying to access that data. Like, it is not very accessible. You're going to have a lot of data providers put various values on their analytics dashboards. DeFi Llama, they do incredible work, but we see inaccuracies over there all the time. And some of it's double counting. Some of it's just not being able to parse through that. So it's just interesting catch-22 there. Actually, it's not even a catch-22, but it's just the fact that once you're centralized, it's like you have to go to greater lengths to prove that, it is what it says it is. And then when you're not centralized, it's like you don't actually have to do that. So you end up not doing it. So Athena, like in terms of those cracks showing up, I don't necessarily see it, at least yet. But the market dynamic that I'm really interested to watch play out is it's absorbing some serious ETH. Like, it is one of the largest entities in the ecosystem that is absorbing this ETH. That is supply in the market. Like, if somebody wanted to go and buy ETH in the marketplace, Athena is slowly eating into that supply, right? And so what that alludes to me is you're going to have this supply shock that is being exacerbated by Athena.
Right.
And this is just taking place in the background because these ETH tokens, they're not really liquid, right? They're holding it locked essentially in a centralized exchange, holding into this 1x short position. And eventually this is going to reach a tipping point. And I'm really curious to see like how explosive a move can be when it decides to happen. So,
yeah. Well, I mean, it's one of the reasons we're here, right? Seeing some of this experimenting and be able to watch it play out in real time. It seems pretty interesting to me.
Yep. And just the other item I was going to draw attention to in terms of interesting flows for the week was just what was taking place Mantle. So I guess this is another liquid restaking token that is in the marketplace from Mantle. It's called METH or METH, I guess you call it for short. It's
definitely not the right term to be using in the American market.
Okay. Absolutely not. So that is their liquid restaking token. They have created, I guess it's the ability to harvest their Cook tokens, which is their governance token, is my understanding. We are seeing some decent flows show up. And
I'm sorry, are you saying it's called METH and then they have a Cook token?
Yes. So their liquid restaking token of ETH is METH. And their governance token, and I believe this has to do with Mantle as at large, or maybe it just has to do with their liquid staking and restaking products, but it's the Cook token. It's just additional yield that people are looking to harvest, and we're seeing some flows attached to that. It's one of the bigger ones for the month so far that we're checking in on this week. And one of the projects responsible for this is actually called Dolomite. And for anybody not familiar with Dolomite, that's a looping strategy platform, and one of their offerings sits on Mantle. And you can kind of see this right here, CMETH, is kind of what we're looking at. So you're seeing a bit of an increase take place for the month of December. Something to watch out for when that starts to kind of wind down. But yeah, that's a new liquid restaking token that's starting to garner some share. I wouldn't say it's going to move the needle. Nothing like Athena, nothing like the ETFs right now. Those tend to be the main drivers.
The meth isn't going to move the needle. That's surprising.
That's probably surprising. A good thing. Yes. Yeah, that's Ethereum. So to sum up, really similar to Bitcoin, ETF flows are going to be the dominant thing to watch out for. Athena flows continue to ramp up, and if anything, that could just aid into future supply crunch narratives that might surface. And fees look good. I would expect them to start to rise as price starts to rise, and then somehow look okay on the heels of the upgrade, but the long-term effects could hurt Ethereum.
Okay. All right. And the last one we have is Solana then.
That is correct.
And I think last time we spoke, we were really looking for an alternative to Pump.Fund, as that was starting to be throttled back because of some of the concerns they were having with activity around the tokens on Pump.Fund. Has Solana been able to find an alternative already? Or is it still in search of a new narrative?
If anything, what I'm finding with the flows is that a lot of the ecosystem has been reliant upon all the activity that has existed on Pump.Fund. And a lot of this has to do with kind of the yield markets over there. And so if we look on this chart, you can see fees have been falling continuously since, that November time period, which I think is when I forget who said it, but Pump.Fund started to pull back the streaming capabilities on its platform, and kind of ever since then, the fees have been being driven down on Solana at large. If you look at Pump.Fund, their stats, you're not seeing that.
Hey, we're not seeing it right now. Yeah.
Did I just drop the stream? I did.
All right. Get a second to bring it back.
Yeah, I'm gonna give that a try. Am I on the right one?
And the market continues to bleed red.
Yeah, which ones are the worst?
Well, according to this, XRP down 7%, Cardano down 4.6%. Shiba Inu, shocker, down 7%. I mean, I see one below. I can't really tell the icon there, but it's down 12%. So I know we've got a bunch that are definitely seeing some outflows today. But right. It's funny, if you've been here since 2017. I mean, a correction like this, or even longer before that, I mean, this is pretty mild. But yeah, let's get back to the Pump.Fund and some of what we're seeing there.
Yep, and it looks like I kind of messed it up. So give me 1 second, because I'm not able to. Oh, there goes my head.
There goes their head.
Nice.
Right. That's what happens.
Okay, I think I got it now set up correctly.
Okay, there we go.
We'll fix my head there. Let me put my head back on. All right, we're good to go now. All right, so Pump.Fund activity, less tokens being launched per day. That's reducing the amount of fees. Less sniper bots. Less MBV to capture in the marketplace, less slippage existing. So it's just, if the tokens aren't launching, then you're not going to have as much activity and amount new capital starting to flow in. So that should be well known. That's kind of driving the fees. But where I was more interested to kind of look at this was, I mentioned the MEV component, And Jito kind of has this infrastructure that's built to really capture that MEV. And their yields for the better part of 2023 and into 2024 have been slowly marching higher. And then as kind of Pump That Fund started to peak out, you saw their yields kind of peak out as well. And now you can barely see it in this like 80s version of green here. MEV, the amount of yield associated with that has dropped considerably. And so we can actually attach that to the downtick in what's happening on Pump That Fund. And these yields, I have to imagine, are going to come back in line with what they were prior, unless we see sort of this new narrative show up on Solana attached to a lot of trading that could be happening. And so this is kind of one spillover. But the other interesting thing was when you start looking at the flow of SOL tokens throughout the ecosystem, you can see a lot of it is thanks in part to Camino. There's a lot of tokens that are coming into Jito from there. And over in their marketplace, you can kind of see right now, like most of this is associated with Jito at 10%. We mentioned this is probably going to be coming down in the coming weeks. This is realistically probably near 8%. And if you look at the borrowing markets, you've seen that these are coming down considerably as well. So people don't feel the need to go out and kind of borrow Solana tokens to go and do a bunch of these trades. And so this is now we're kind of in this secondary effect that could be happening, which if people want to go ahead and lock up SOL tokens to go ahead and earn yield, it's not really happening, right? You don't see Jito Sol, Jube Sol. I know it's not a ton of supply, but these markets do exist. And if people want to borrow and use it for trading, then you would expect to see kind of the supply APY start to be cranked up. Like borrowing at 1%. Shouldn't be down at that level if things were looking kind of in the positive direction. But again, this is one of those secondary impacts of kind of losing what was your main demand driver in the market.
Right. Could be a tough go of it for SOL over the next couple of months. And I know we have pretty substantial unlocks of supply coming next year. Question, of course, will be if they get dumped into the market, if they stay in wallets, because I know that the velocity definitely plays a role in how the token price performs.
Yeah, we'll see. There'll be a lot more discussion come Q1 on what's going to happen to that supply. I'm sure we'll hear Mr. Novogratz talk from Galaxy Digital about, don't worry, Solana is the greatest protocol. You really want to buy SOL tokens, especially the ones that get unlocked and distributed by me personally, Mr. Novogratz. I joke, but I'm kind of partially serious at the same time. The ETFs, I don't necessarily, thanks to Rodeo on Twitter, he was kind of helping me see the light there that it's probably very low chance that the Solana ETF gets approved first time around. That's mostly because there's still unlocked tokens that exist in terms of the amount in the holders. Tokens are being vested. And so how can you really have a token that's supposed to be a commodity, kind of get that approval when there's VC? So yeah, I mean, it's murky water. We'll see. But
yeah, it could be a buy the rumor, sell the news kind of event that people are trying to spin.
Yep. Yeah, we'll see. I mean, it's, if anything, just watching what's taking place on Solana as we're watching the downtick on Pump That Fund, it's kind of just telling us how attached Solana is at large to trading. And that doesn't mean it needs to always be meme tokens. I remember there was a project that was locking up stock shares and trying to make that available for trading. Like, what if that shows up tomorrow? Like, Solana is just going to come back to life and everyone's going to be hanging out over there. And again, SOL, this reserve asset on Solana, is going to have an insane amount of demand. So like these narratives can just pop up overnight over there. So, is Solana dead? Heck no, right? Solana, no way, right? It is buy the dip on Solana for the foreseeable future. Now, one thing that I noticed as it related to the flow of tokens outside of Jito essentially getting most of the flow for past year was Binance was starting to show up on some of these liquid staking tokens with the BN Sol token all the way from end of September, early October. It quickly went from pretty much zero all the way up to looks like 5 million Sol tokens. So they're becoming a significant player in where Sol is sitting in the marketplace. So I would expect to hear more. Maybe it's already been said and I just haven't heard it, which is very possible. But with CZ kind of coming back and he's not able to really take part on the centralized exchange side of things, he's going to be more active on the on-chain side of things. And so seeing maybe these connections surface with Solana is probably, you can almost think of it as the equivalent of new trade partners showing up for Binance as well as for Solana. So that could be some positive developments that haven't necessarily hit the market yet. More to probably come on that. It's something I do plan to look into a little bit over the next week. So again, as it comes to Solana, we do see the fees, the demand drivers starting to come down. That is on the heels of the pump.fun activity kind of hitting its peak. And then that is spilling over into the yield markets. And then you're going to see that kind of spill over into the lending and borrowing markets as well. And so this is sort of like kind of like the first stage, then the second stage of things, and kind of getting closer to the third stage of what happens on the heels of kind of euphoria markets. But it's not necessarily an unhealthy type of market by any means. And if a new narrative shows up tomorrow, I would expect things to just continue as they were before. So
okay,
Solana's a wait and see, wait for that demand driver to show up, and then kind of we're back at it.
Perfect. All right. Well, very interesting to see this activity. This is the third time we've had you on to talk the flow report, and it's definitely given me a deeper perspective on what's actually happening on chain, right? What will ultimately drive price, I think, which is one of the reasons I'm always so excited to hear it, even though it's a lot of learning, right? At this stage, just a lot of different aspects of the protocols and the flow. So interesting times. All right. Well, with that, we are going to wrap up today's show. Hopefully you've been listening to my final remarks at the end of each of these shows where I say, have some dry powder. You want to have some dry powder so you can listen to Ben Lilly and start to think about maybe where you want to allocate, or you can be listening to some of these other guys and seeing some opportunities. Maybe you can try a new trade out that can really add to your portfolio, or perhaps you're going to allocate some money to Jay, because you're starting to see what is so exciting about being able to allocate to an on-chain bot or version that truly is one of its kind. So exciting times. But with that, stay safe out there. Definitely look for some opportunities. Join us next week. We'll be back covering the flow report as well as the next set of trades. This is Marconi White signing off.